I got a good one for you. Question: how do you win the game Monopoly? Well, in my experience, the only way I could win is if I bought every property that I landed on. Interestingly enough, and go figure, not only did this apply to Monopoly, but this applied to the game of life. And I'm not alone. Maybe you're with me. I'm certain there's millions of other Americans around the country that would all agree that purchasing real estate, home ownership, whether it be 1, 2, or 10 homes, has been the best investment or one of their best investments of all time. Hello, everyone. This is Loan Officer JT. And in today's episode, I'm going to share with you 5 mortgage guidelines that every human should know on how to achieve a multi-million-dollar real estate portfolio. Now, pay close attention. Without having to put 20% down and without having to pay the crazy interest rates that are tied to your non-owner-occ investment mortgages. Yes, that's what I just said. I am going to show you the path on how to achieve a massive real estate portfolio that could easily equate to multi-million dollars worth of property without having to come up with 20% down on every house and without having to pay the crazy interest rates that are tied with these non-owner occupied mortgages, right? Now, I may shatter your perception of reality, but at a minimum, I'm going to get your wheels spinning. Number 1, Fannie and Freddie allow for 10 properties. What do you think? Does that mean they want you to have 1 or 2? No, that means they're perfectly okay with you leveraging their money up to 10. Now, if you don't know who Fannie and Freddie are, I'm not going to spend a lot of time, but quick backstory. Fannie and Freddie, government-backed agencies. They take mortgages from people like me in banks. So as long as I meet their guidelines and you qualify and I did my job, they'll take your loan and then we'll have money to issue to other people. So we issue loans, Fannie and Freddie take them off our books. We issue loans, Fannie and Freddie takes them off our books. So it's important to know that you can have up to 10 with Fannie and Freddie. Number 2, what's the definition of a primary residence? Well, by definition, it's the home you live in. Now, when you sign your closing docs and your promissory note, your deed, you have all this paperwork. Well, in that paperwork, you know what it says? It doesn't say you have to live there for 30 years. It says, I intend, or the borrower intends to occupy the property for 12 months. Wow. I'm 39. Time's flying. 12 months to me is nothing, all right? Now, let's look at the game that they've set up, how the cards are stacked in our favor. I can do a 30-year fixed, get the lowest interest rate, put 5% down. Let's say I buy a house in Denver for $400,000. Now, if that was an investment property, I'd be putting 25% down, and my rate would be almost twice as much, right? Well, maybe not, but pretty close, 50-70% more, depending on the state, depending on the bank. Now, why would I ever do that? Well, I wouldn't if it's a primary residence, okay? But as you're gonna see, we're gonna be able to rinse and repeat. Let's think for a second. If I buy this house for $400,000, let's say next year I'm making more money. Do I even have to explain? Not really, but let's just say I got a pay raise. Or let's just say that I wanna have a portfolio of 10 homes in the next 10 years, 5 years, 20 years, who knows your time frame, but let's just call a spade, right? I am set out to become a very savvy real estate investor who's going to develop a multi-million-dollar real estate portfolio because this is the way the chips are stacked. This is the way it's working right now. This is how all these people are doing it. People like, or not everybody, people like you, people like me.
What do you mean, you people?
A lot of people just don't know the rules of engagement. A lot of people fear the unknown. That's only natural, right? If it's dark, I could trip and fall and break my neck. Everybody fears the unknown. But once you understand the guides and how this works, it's kind of like the tax code. How these super rich people aren't paying taxes is they know the money game. They know how to navigate those waters like me, right? So, the definition of a primary is the roof over your head. Why I dove in so deep is because if you do it as a primary, you get the best what? Interest rate, the lowest cash out of pocket. Not just me, but most of the people I serve want to keep their money and they want to keep their payments as low as possible. This is across the board, okay? Number 3, pay close attention. This is very important in this video. When you're vacating a primary residence, the lender, me, not just me, any lender in the country, because these are guidelines. When you're vacating a primary residence, if you introduce a lease agreement, when you're buying another home, the bank will take that lease, let's say it's for $2,000 a month, and they'll give you 75% of that as income. Well, what does that mean? Well, maybe your mortgage payment's $1,500. You introduce a lease for $2,000. All of a sudden, that mortgage payment's a wash. So what does that mean? You don't have the debt. So now I just pulled off that $400K, the aforementioned example, and now I'm gonna go out and buy my $550 or $600. Are you with me? I don't even need to make that much more money. This is super important. A lot of people don't know this. As a matter of fact, if I had to make a bet in Vegas, you don't know this, and your realtor doesn't know this, and, well, a lot of loan officers should. I'm not gonna throw them under the bus. I've always been a fan of loan officers. Smart, good-looking guys. No, just kidding. And women, too, of course. Oh, did I just ruin the video? So that's so important that you understand these guidelines. So again, if I'm leaving a home, and this is every state in the nation, if I'm vacating my primary, the lender, Fannie and Freddie, in their guidelines, they allow for me to introduce a lease agreement to offset the debt. So maybe I was making $10,000 a month at $400, maybe I'm making 11, it really doesn't matter. But now I'm able to buy that larger home. What am I doing? I'm potentially becoming a real estate investor, building a multi-million-dollar portfolio while leveraging what? The cheapest capital and keeping most of my money. Now, I'll tell you one of my biggest frustrations with real estate investing, and what I think makes it really hard for most people, is coming up with the 20% down. Try to come up with 20% down on 10 homes. You could spend a lifetime trying to come up with 20% down on one house. Right? So pay close attention, because if you understand how this works, you're only going to succeed. If you're financially savvy, you understand the banking and the finance, you're going to win in life. And to clear up any confusion, yes, you can keep buying homes over and over again in the same town, right? So long as you're moving up. Now, everybody's different. We are very multifaceted, but just to give you some examples of why people do this, well, maybe you want to. Maybe you're like me. You just want to keep building this portfolio. Maybe I got engaged. Maybe my fiance hates my house. Maybe I married a woman with more kids. Maybe I make more money. You can always move up. Now, here's where it doesn't work. If you call me and say, hey, JT, there's a house that's half the price of mine down the street, the banks aren't going to like that, right? They want to promote growth. But if it looks like an investment, it might be hard. I'm not saying you are going to rent it out, but those pills are a little harder to swallow. Number 4, second home. What's the definition of a second home? Well, let me tell you right now, it's not an investment property. Why? Because you're going to occupy that property. There's a lot of misconceptions. Some people say, oh, you got to be there 3-4 months. It's like, you're crazy. You're crazy. Here's why. Can I not buy a home in Oahu and spend December there for Christmas? And to top it off, I have a brother and sister in Oahu. So it makes perfect sense for me to go buy in Oahu so that my family can vacation for Christmas. And what am I gonna do when I'm not there? I'm gonna rent it out to other people, Airbnb, VRBO. A couple other ways to make sense of a second home. Not only does it have to be a vacation property, but maybe you work somewhere else. Maybe I have an office in San Francisco. Maybe I have an office in Aspen or New York. Do you think the bank's not gonna let you have a second home there if you're gonna be there? Who knows how often? Or maybe you have family somewhere. In a nutshell, if you're gonna do a second home, it needs to truly be a second home. But if you're like me and you have a desire to have a massive real estate portfolio that's worth millions and millions of dollars, this is still a really good investment because I'm not losing money. As a matter of fact, if you get the right deal, you could be cash flowing off your second homes too. Now that brings me to my next topic. How many second homes can you have? You can have more than one. Maybe I work in San Francisco and I got a second home over there. Maybe I'm in Hawaii for Christmas, okay? Are you with me? Another cool thing about second homes is they only require 5% down, right? A lot of people don't know that. And even better, the rate is on par with the primary residence. You're allowed to rent out your second home. What they don't want is you to introduce a management company and have long-term rental, meaning year over year, because that's not a second home. You do have to occupy it, okay? But nobody's gonna get upset if you Airbnb or VRBO while you're not in the property, right? You think these properties just sit vacant everywhere and everybody? No, these are second homes for people like you and me who rent them out to people on Airbnb when they're not in town, and then Christmas rolls around and they go and have Christmas in their beach house. All right, so that brings me to number 5. Let's talk about relocating. If you're like me, with this new normal, I guess you would say, I now am a nomad. I work from home. How many millions of Americans are no longer forced to live in LA? I could tell you, there's a lot of rich people from California moving in, and I'm wondering where do they get all this money? And that's in another video. I'll share with you how all these rich people are buying $2, $3, $4, $5, $6 million homes without breaking the bank. Little plug. But I can work from anywhere. There's millions of people that can work from anywhere. Here's another way to keep getting primary residences with only 5% down with the lowest rate. If I live in Boulder and I can live anywhere in the United States, maybe I want to move to Marin. Maybe I want to move to Virginia Beach. Maybe I want to move to Miami. Does the bank really care? No. I can leave Boulder. I can introduce a lease to offset my mortgage payment, which maybe I'm cash flowing. I can move to Miami because I can work from anywhere, and now I'm approved for another home. So what do you think? Interesting stuff, right? How do you like the idea of having 10 properties, a multi-million-dollar real estate portfolio without ever having to put 20% down, without ever having to be subject to these crazy interest rates that are tied to the non-owner occupied investment mortgage programs? Remember where you heard it first? Holler at your boy. Do me a quick favor. Will you subscribe? Will you like? And if you have a mortgage scenario or question or something you're thinking about, anything real estate, because your boy is the self-proclaimed foremost expert on the entire internet when it comes to real estate and finance. As always, if you're thinking real estate, think JT. I'm only a call or a text away. Until next time, God bless you and God bless America. That's not how gangsters like me and you roll the dice. You know that, right?
Then turn left onto Oak Clear Drive.
Back to the money.